The only simplicity to be trusted is the simplicity to be found on the far side of complexity. Alfred North Whitehead. That word simplicity was hard for me to get out today. Sorry about that. That's about the third time I've had to record that line, but it is a great quote. The only simplicity to be trusted is the simplicity to be found on the far side of complexity. For those of you who listened to the training we put out yesterday, we put it in the show notes every day. It was about complexity, and we have tried our best. Over the years, we've gone through many different machinations of indicators and vast charts that were complicated, and we've come back to what the charting masters of the past always used. And you know what it was? It's price movement and it's volume. It tells you everything you need to know. And in fact, I'm going to put the volume training at the end of today's video. If you haven't taken it, I think I released it last week one time. I'm going to release it again. Please take it. It's really good. It's based on the volume chapter or chapters out of my latest book, Three-Wave Trading Advantage, that you get as a Patreon member. Again, first thing you get along with the three-part series, Options Made Simple, The Charting Wealth Way. But please take that volume training. It'll help you understand how we use Heikin-Ashi candlesticks and the volume metrics together. And let's jump into these charts. Stocks are mixed. We see everything else is down: bonds, gold, and Bitcoin. Let's jump into the S&P 500 first, which is what we always do. Pulled back just a little bit, 0.13%. The NASDAQ up 0.13%. So again, maybe we're having a topping out. At some point, my friends, this market's going to go down. You can see that the first day of the latest two-day candle, we're about a little over halfway, it looks like, on the volume, open lower than the prior close. That's what the red volume means. We have a doji there. You can see 1.5 days of red candles on the half-day chart. So again, where does that leave us? Well, it leaves us with still bullish. As far as the S&P 500 goes, decent backtest accuracy, decent bullishness. And again, we've been bullish for a long time, and those who've been following us, you've been riding that with that puppy all the way up, and it is just beautiful. But I keep saying, keep your eye on the prize, keep your eye on the prize. At some point, some catalyst is going to break this thing. But until then, we will keep riding it. What about the Qs? It was up a little bit. We can see a higher high for the week. Okay on the volume. Today, I guess that's okay. And as we look at things where it looked like they were up a little bit in the morning and must have maintained that through the afternoon. Okay, volume in the afternoon. So again, higher high this week. Looking nice. We're continuing. The directional probability, not quite as high as the S&P. Same with the backtest accuracy, but again, still bullish and up. Now we've gone up to a little higher bearishness on 20-year U.S. government bonds. And again, I still think we have room to move on the upside. It was down just a little over 0.5% today, but these candles to me look like it's going to continue to fuel that fire of some up movement, but you can see where things popped up nicely yesterday and then sort of slacking off a little today. I still don't agree with the numbers. I still think that we are bullish on bonds, but that's where we are. The math and I disagree. What about gold? Gold pulling back, and in fact, our bearishness on gold is up a little bit from, let me compare with yesterday. Our bullishness on gold is up a good bit more than it was yesterday. Still not a whole lot better than a coin toss, but with this down day of 1.73% and our third candle being formed after having pushed through one full candle ago on the way down. And of course, we saw the half-day chart starting to move down last Wednesday, and we've only had one little green candle since then. maybe gold after breaking through this weekly trend line. We're going to see where the volume is at the end of the week. We may be going hard down on gold. We shall see. And lastly, HODL. Of course, that is our Bitcoin ETF. It's pulled back about 0.5%. We are still decently bullish on Bitcoin, and we'll keep an eye on things. We're going into our, third doji right now, and we broke the weekly trend line 2.5 two-day candles ago. So we'll keep an eye on things, just sort of sideways tracking. You know what happens so much of the time when you see that? After a big move up, it's digestion time. And once it finishes digesting, it may very well take off again. That's where we are as we end the day on Wednesday, go into Thursday. Thank you so much for being with us. We always love to hear from you. Don't hesitate to reach out. CW@chartingwealth.com. Patreon members, we already emailed out to you before we even did the show. We sent you the July 31 5-day plus ETF trading analysis and execution plan. And of course, we released the old one from yesterday to all the members, and to the public, we released the one the day before. Check it out on the Patreon page. God bless. All the best from Charting Wealth.